Hi, welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I'm a company valuation expert in St. Louis, Missouri. During this episode, we'll discuss employee stock ownership plans or ESOP plans as an alternative to selling your business with Melissa Beezhack. She's an ESOP valuation expert in Pittsburgh, Pennsylvania. There's also some challenges to ESOPs, and there's some scrutiny and controversy around ESOPs. And you talked a little bit about it with that one case, but the reality is there are way more cases regarding ESOPs, probably mostly from a business owner, maybe pricing it too high and it's not being fair for the employees. But what other challenges have you seen, and how has it sort of come in the courthouse kind of situation?
Well, most of the things that, we see that go through the court are dealing with, the valuations of the companies and ensuring that, fair market value is being observed. There have been a number of cases, and each of these cases will establish some type of procedures or protocols that need to be observed by, that particular institutional trustee in terms of their dealings with ESOPs. And, we, working a lot in this niche area, we're looking at all of the court cases that have come to pass, ensuring that we understand, what the protocols were in those particular cases, and trying to make them best practices for us, in terms of preparing our evaluations. But, always setting that, the price at fair market value is being challenged. And, there are a number of things that we need to make sure that we're checking the box and doing our due diligence. And the biggest area of challenge, I will tell you, is since value is always forward looking, we're typically getting forecasts from management. And one of the challenges that you have is and sometimes they're a little bit more goal focused than most likely. And, we have, part of our due diligence is we're really going in there and kicking the tires on these forecasts. And, with initial transactions, that can be difficult because, we know the recent history of the company, but, if something has recently changed for the better, and, the company is preparing a set of projections that, have some super high growth, it's very difficult to, accept them without, having a little bit of angst as to, can we achieve this? It's one thing for the business to, start experiencing growth, 3 years before, installing an ESOP, and then you have that track record where you have some confidence. But the other thing I'll tell you is once an ESOP is up and running, what we do for our annual ESOP clients is every year we look at, okay, last year you said that in 2019 you were going to achieve, $2 million of operating income. What actually happened? And we gauge year over year how accurate management is. How do they go through the process of putting together the forecasts? How do they vet through the assumptions? And then how do they actually, how do they perform, based on prior year forecasts? And then, we do then establish a track record from which, we can start having a lot of confidence or building confidence in the way management is forecasting. So I think that's one of the biggest challenges when it comes to, ESOP valuation is ensuring that those forecasts are really the most likely and not really goal or sales oriented forecasts. The other thing that I think is just a huge challenge for ESOPs is, really observing and respecting that repurchase obligation. As you talked about, there are certain triggering events. There's, retirement, death, disability, as well as diversification that's allowed for that, causes this repurchase obligation. And you don't want to have to deal with it the year that, so-and-so is up for, diversification of their stock. They can diversify up to 25% of their ESOP holdings. And, that could create an immediate issue. You want to plan for those things ahead of time. We always encourage our clients to get a repurchase obligation study. There are a number of places throughout the country that specialize in doing those types of projects that, the company can engage to understand, okay, down the line, we have these obligations, but brought back to present value, this is what we're looking like now. And that helps tremendously, because if you get to a point where the company can't afford those repurchase obligations, if it becomes too unwieldy, that creates a big problem.
Well, and I think a central thing that people don't necessarily always understand is that when we're doing valuations for estate planning, we are doing them to defend that valuation against the IRS, right?
Correct.
When you're doing ESOP valuations, you are doing it to defend that valuation against the Department of Labor.